Hey everyone, hope you guys are well. Happy Sunday. So what I'm going over today is all the setups that took place last week from the 29th, Monday the 29th of May up until Friday the 2nd of June. Now, it was a very great week last week, so many incredible opportunities, and for the entire month of last month, it was my big performing week. So I'm excited to share some of the setups with you guys. I know some of you caught some of the good trades. And of course, I'm going to go over some of the pluses as well as the negatives. So starting on Monday, if we start with a daily time frame, we can see that in terms of draws on liquidity, the next draw on buy side was this initial swing high, and the next draw on sell side was this initial swing low down here. And now if we go down to the 4-hour time frame, and again, just going to forward play this to just before the European Open, we can see very clearly, of course, that price had given an initial expansion on the 4-hour time frame, as well as breaking market structure, beginning the bullish cycle. Now, the next draw on buy side liquidity just before the European Open on Monday morning was this initial swing high, and the next draw on sell side liquidity was this initial low. Now, if we go down to the 1-hour time frame, again, so just to take a look just before the European Open at 2 a.m. New York time, we can see that price had delivered this initial swing high as the next draw on buy side liquidity. And of course, the swing low was the next draw on sell side liquidity. In terms of market cycle, we've seen obviously this initial 3 pushes to the upside. So this is an initial bullish cycle with a full reversal to the downside. Thereafter, price began a new bullish cycle. So we can see that this is the first expansion of the new bullish cycle. So anticipations on the 4-hour is bullish, and anticipations and projections on the 1-hour is also bullish. So going down to the 15 minutes time frame, so we're now taking a look to see how price essentially traded outside of the Asian range. We can see that going into so I'm just going to mark out the opens. So we have the 2 a.m. European Open, as well as the 3 a.m. London Open. Right, so we can see the price gave a bullish break outside of the Asian range, right? So this is a very nice break. And of course, an AOI after this takes place is going to be the bullish order block responsible for the break. Now, of course, at this point, we have to wait for price to also take out at the minimum the H1 SST or the H1 BST residing above price. So what happened? Price came down, took out the H1 SST as well as the H4 SST. Now, bearing in mind as well that the 1-hour is bullish, the 4-hour is also bullish, right? It's always wise to anticipate 15 minutes projections in line with the 1-hour and the 4-hour buys. So in this case, now remember that with break retest with continuations, price can take out the low of the Asian range as well as the low of the order block. So it's not always the case that price taking out the low of the Asian range, it becomes a 15 minutes break retest reversal scenario. But one of the biggest way to determine this is based on, number one, how price breaks below, and number two, I also like to pay attention to how price moves on the 5 minutes time frame. So if, for example, price gives a break of market structure, leaves in a massive unmitigated zone, and then gives a massive shift away from the unmitigated zone in vector acceleration, very rapid price action at the London Open, then I will use that to determine if we're looking at inducement activities, which this clearly is because it took place at the start of the session open, or if we're looking at a potential new bearish cycle to the downside. So the two ways one could have looked at this. One could have looked at this as a 15 minutes PRR, or one could have looked at this as a BRC with price taking out the low of the Asian range, as obviously where the H1 SST was, as well as the low of the order block. So within a context of a BRC, so which is a break retest continuation, what we would have been looking for as soon as price is taking out these lows is a break of market structure. So we can see the price creates an initial low, comes down, delivers a lower low, right? And bearing in mind as well that on the 5 minutes time frame, right, what we're looking at is number one, number two, and a potential third expansion to the downside, right? And then, of course, after that lower low, what we're looking for is a scenario where price gives a break of market structure. So we can see that this is taking place right here. So this is a classical break, or the secondary break of market structure, right? And stop goes 5 pips below the low. Okay. Now, in a bullish scenario, of course, the first target must be the recent high, which is right here. So this is the recent high target. So 1 second, I'm just going to make this line and make this black, a little bit thick. So this is our recent high. And of course, the second target would be our H1/H4 buy side target. So if I take a long position holder, we're entering at the imbalance, stop going 5 pips below the low. And of course, that first target is the recent high. And then a second target is the H1/H4. There we go. So what price did, price traded into our imbalance, right? So it went quite deep actually into, but didn't take out the recent low. And then price hung around for a bit for literally until New York open. And then during the open of, and just after the open of the New York session, that was when we saw a bit more activity with price given that bullish move to the upside, right? And of course, this did take quite some time for price to sort of move, because of course this is a Monday. Mondays are usually very slow in terms of trading activity, right? But we did see that activity. So what I'm going to do is just going to go down to the 15 minutes time frame and show you guys, just so it's a little bit faster, how price moved on the 15 minutes. So just like that. So obviously this went into the next day. So this went into Asian session, but during the Asian session, price traded into that recent high and took out the first target at the recent high before trading back into the range. Okay. So this would have been something that one would have needed to have held for literally the whole day up until the end of the trading session. And obviously going into the next trading session where price eventually did take out this recent high for a 1 to 2 R to R. So that was Monday. Now, this wasn't exactly the most obvious setups. I actually got this setup wrong because I had initially seen this as a potential break of market structure on a 15 minutes time frame. And then I was like, okay, break market in a 15 minutes time frame. My AOI became sort of this breaker. So when price did trade into the breaker, and sort of gave a confirmation right in this area, I actually went short, and obviously that short did not yield any profit because price had gone against me. So this was, I would say, one of the bads of last week, for misinterpreting this initial structure. But of course, if I had interpreted this in line with the H1 as well as the H4 bias, then I would have definitely seen this as a BRC. But BRCs are not always typically like this, but I have seen a few occasions where for BRC scenarios, price does take, especially if when price breaks outside of the Asian range, it doesn't take out the H1 or the H4. It will sometimes just like either rally, take out the H1, H4, and then reverse, and then we just trade a reversal. Or it will drop, take out the H1 and H4, and then give that bullish continuation to the upside. So it's a very nice reminder because, again, like I said, these setups are not that popular, so it's very easy to forget scenarios like this. So let's take a look now onto Tuesday, going into Tuesday's trading session. So obviously Monday, we've seen that initial session of rise. On Friday, we're anticipating bullish continuation, which we kind of got, but again, it's like this is a more of a contraction candle because price, wicked out on both sides and closed at around the open price for the trading session, although it did close at a relatively higher price than Friday's trading session. So one could classify it as a session of rise, but bullishness is obviously still the most obvious bias within the context of the daily, with a target being, of course, this initial high. Now, is important to have noted that at the close of Monday's session, a new swing high was created. So the new drawn buy side liquidity went from being this swing high up there to being the swing high down here. So going down to the 4-hour time frame, so just to forward play this twice, we can see that price obviously had delivered on Monday. So we still have that one expansion. Price contracted essentially on Monday. And then going into Tuesday, the next drawn buy side liquidity is, of course, the swing high from Friday's trading session, right? And of course, the next draw on sell side liquidity. So it's basically the same draw as Monday's session. The next draw on sell side was this swing low down here, okay? So we are still within that initial one bullish expansion at the end of the Monday's trading session. So going into just before the European session on Tuesday, so I'm just going to forward play this again on 1 hour. We can see the price had, although on the 1 hour, on the 4 hour, it was still within the first expansion. On the 1 hour, price had gone from the first expansion and traded outside of this initial range, and not just trading outside of the range, but obviously closed outside of the range and given that second expansion to the upside before contracting to take out a short-term low, which is very typical of price after it gives two highs. Now, of course, the next draw on buy side within the context of this was this imbalance. The next draw on sell side on the 1 hour is the swing low from Friday's trading session. Now, on the 15 minutes time frame, right, we have very simply, oops, that was a mistake. So we have a very defined Asian range for point A, point B, and point C. Now, price traded outside of the Asian range, start of the London Open with our new AOI being this order block right here. So now that we have an order block, right, and price is traded out, the next thing we want to see is for price to do what? To take out our sell side target or buy side target, which is this imbalance, and to trade into the order block. So going into the London session, we can see the price traded into the order block, which ticks the first criteria for a setup, but it's neither taken out H1 SST or BST. So again, we wait. And then we see that right here, price essentially takes out the H1 BST, right? So which is this imbalance, right? Which now ticks the two criteria that we would be looking for if we were going to be identifying a sort of a trading setup. So now within the context of this, obviously what we've seen is a break with a retest of the order block and price trading into a high volume area, which is the H1 BST. So we can either anticipate a BRC from the H1 BST, right? And price can then trade down to take out the recent low as well as the H1 SST. Or alternatively, we could anticipate price to give a break retest continuation, a break retest reversal on the 5 minutes time frame. So obviously a 5 minutes BRR would be where price would give your break of market structure on the 5 minutes, right? And then would anticipate price to retest the last down close candle, which is our super high volume area all the way down here. And then from this area, we will then be looking to trade a bullish continuation to the upside. Now, it's also important to note that on this trading day, there was US consumer confidence data report taking place at 10 a.m. Now, this is very important because, of course, what this indicates is that price has a possibility. So when there's a red news event, price has a very strong likelihood of holding in London and then shifting in the New York session. And it's important to always be aware of these possibilities. So in this case, anyways, I was anticipating either a BRC, which is a price to trade and give a reversal down to this general area, and then I was looking to go long. But no, sorry, I was anticipating a BRR for price to trade down into this general area because this is where price broke market structure on the 5 minutes time frame and left an unmitigated zone, meaning price failed to retest this area. So I was anticipating a retest of this area and a bullish continuation in line with our 1 hour and our 4 hour bullish bias. So essentially what happened was price failed to actually trade into these general areas. Rather, it just kept on rallying and rallying and rallying and eventually traded obviously into our daily, above our daily buy side target, right? So at this point, you can anticipate one of two things because for me personally, this is what I did. I actually traded a bearish reversal this day because when price kept on doing this, I was like, okay, I know what's happening. What I'm going to do is I know price is going to deliver a setup before the US consumer confidence report. and it's likely going to be a short. The reason being is because price usually would either induce or move in line with the sentiment for that red news event and then go against it when the news data gets released, or it will do the opposite. It will move in the opposite direction to the sentiment and then move in line with the sentiment when that data reports get released. And a lot of the time, the best way to sort of get an idea of whether price is going to move in line with the sentiment or against the sentiment is going to be based on the actual predicted data. Okay, so on this day, it was actually the predicted data was that the consumer confidence is actually going down in the United States. So it meant that consumers were less confident about the future economic situation for the states, for the dollar itself, which obviously is a negative news. So negative news for the dollar means the dollar should go down, right? And dollar going down and pound dollar going up is absolutely in line with the sentiment. So therefore, because price was already moving in line with the sentiment, I was fairly confident that just before the red news event, price was going to go against it. And therefore, for me, the better direction to trade in this case was a short. Okay. So I know it's quite late in the day, and I'm very, very flexible when it comes to trading New York as long as I can see there is a clear opportunity for me to do so. So in line with, of course, this data release, what I was waiting for, because when it comes to very, very high value news events like this, you can either look for a 1 minute confirmation short. All right. Now, 1 minute confirmation shorts can be a bit risky before a red news event, because what price can do is it can give a series of confirmation and then take out the high, and then before proceeding to give that drop to the downside. Now, for me personally, the better direction or the better confirmation to actually to wait for is the 5 minutes confirmation, right? So that for me is the most solid confirmation to wait for just before the red news event drops. The reason being is because a 5 minutes confirmation has a high likelihood of playing out than a 1 minute confirmation. So although you don't get the best R to R, what you're sacrificing is a little bit of reward for better clarity and the least likelihood of getting stopped out prematurely, which is a lot more probable with a 1 minute entry confirmation. So in this case, because I'm trading a reversal against this initial trend, so obviously it's a break, price is given that reversal to the upside, and I'm anticipating a move against it just before the red news event. I waited for this 5 minutes confirmation to the downside. So this is a break of market structure, BMS. Let's say. All right, break of market structure to the downside. And again, what kind of a break of market structure was this? A secondary break. Why? Because price left an imbalance right there. Okay, now secondary break of market structure. All right, we've seen price is giving 2 pushes to the downside. So at this point, what I was looking to do was to sell. My targets were very simple. So I'm just going to highlight myself just the 5-pip stop right there. Now, the first target, of course, was my, so there's multiple areas. I'm anticipating a retest of the daily BFT, but I was also very confident that price would likely trade into this general area to mitigate against this, because again, it's the 800 EMA confluence with where the retest of the H1 BST would take place, as well as the order block. And if you remember, again, it's an unmitigated zone down here. And there's also sort of an unmitigated zone in this imbalance. This is where the 15 minutes broke market structure and left this area unmitigated. So the multiple areas to take profit. So what I did was I said, okay, I evaluated first. I was like, right, if I was to take a very typical entry, right, at the imbalance, right, just at the open of the imbalance with my stop 5 pips above the high, could I get a 1 to 2 to the daily target, right? That was the first evaluation that I did. And for me, the answer to that question was no. So what I usually do in this case is if I see multiple imbalances within this leg, I will look at the higher imbalances and I'll take a risk. I'll be like, look, if this doesn't trigger, I'm okay with that because it's quite late in the day, right? It's just before red news events. So I'm okay to not be in the trade, okay? But at the same time, if I'm going to be in the trade, I want to have a good potential of a nice reward, even, of course, if it means getting stopped out at 0.25%. So I took the higher imbalance, obviously the last coinciding with the short-term high / last upwards candle. Reason short-term highs because after 2 pushes to the downside, price has a high likelihood of taking out the short-term high. So short-term high, stop goes 5 pips above the high. My first target was now the retest of the daily BST. Now you can see that I could now generate a 1 to 3 R to R from this move down here. Now this looks like a small move, but if I can get a 1 to 3 from what seems like a small move, for me that's amazing because the minimum R to R that I aim for is like a 1 to 2 for my first target. And then for my second target, I was a little bit more ambitious because your first target should always be to the most reasonable next drawn liquidity. And then the second one could be the more ambitious one. You could aim to go all the way down here, but at the same time, there needs to be some rationale behind it. So if there's like multiple areas that price could inflect of, then there's no need to aim for the daily ST because price could inflect off the H1 SST, price could inflect off this unmitigated zone on the bearish order block, price could inflect off this area, price could inflect off this area. So for me, the next reasonable drawn liquidity was for price to actually retest this H1 imbalance that it broke above. Leave again, it's a massive imbalance there after it broke above the H1 BST. So I was anticipating a retest of the daily target as well as the H1 target. So it was quite late in the day, set this trade, and that was my bet. So this is like 10 p.m. in Bali. So I just let it run overnight because I just watched anyways to see what price did after the red news. And after that, I just went to bed and I left it. The reason being is because price gave a nice strong shift away from that area, which sort of gave me the confidence to let the trade run. So it's a very nice entry because price traded back to take out this short-term high, also filling this imbalance entirely, right? And then after the red news event, remember, bearish was going against the US sentiment. And it's important you understand red news because again, a lot of traders would always try to trade in line with the sentiment when the news drops. But if people are successful in doing that, then a lot more people will be successful in trading trade news. But the fact is that's just not the case, right? The market makers, the institutions, they make a huge amount of money and they bring in a new liquidity from when red news events take place. So you need to understand trading from the perspective of the institutions. The sentiment has already been created. They've already put their money in the market because they've already anticipated what this data is going to take place. They already know what's going to happen. So for them, it's not guesswork involved, right? And then essentially what happened was because they're already net long in the market, they're already net short in the market, right? Because remember, traders are buying, who's selling to them, the institutions are building short positions on their book. So for them, what they need is for price to move in the opposite direction for them to yield a profit. So first target was hit at the retest of the daily zone, right? After that, obviously price retested, broke below it, right? And obviously this was an overnight trade. So I actually held this position overnight, right? Into the next trading session, right? And in the next trading session, right? Price actually in the morning traded into my second target. That was just before I actually had the next setup to take place. So it's a very nice trade. So TP1 was hit at the daily BST. And then the next day, price traded to refill traded into this H1. I'll just show you a little bit better, traded into this H1 target. So very, very nice trade to have taken in line with the consumer confidence. So this is what I'll define as a red news trade, right? So red news trade is one of the trades that has a high likelihood of giving you a nice positive yield in your account growth. All right, so that was on Tuesday. Let's take a look at Wednesday. So going into Wednesday, we obviously price had taken out the daily buy side target. So we now need to adjust our next drawn buy side liquidity to this new swing high, and sell side liquidity is the swing low down here. Now on the 4-hour time frame, right, this is very simple. We have this initial expansion for the market contracted and obviously deliver that second expansion on Tuesday. So bullish is still the better direction on the 4-hour. We are still anticipating longs. So if I just forward play this to just before the European Open, we can see that the next drawn buy side liquidity on the 1 hour, on the 4-hour is the swing high. And obviously next drawn on the sell side liquidity is this imbalance down here, okay? Now, if we go down to the 1-hour time frame, you can see very simply, again, just going to drag these along, right? Now, the 1-hour perspective for me was very important for trading accurately on Wednesday onwards. The reason being is because obviously price had completed a bullish cycle. So on Wednesday we'd seen that, on Tuesday we'd seen that final expansion, which was very aggressive, was very nice. Unfortunately, there wasn't an opportunity for us to trade in line with the expansion, but the red just presented us an opportunity to trade the reversal of that expansion, which is beautiful. So price obviously gave this reversal to the downside. We've seen number one. So because again, you always must interpret the reversals within the context of that next higher time frame. So if the next higher time frame is still bullish, then I'm anticipating that this will be a partial reversal that will lead to a bullish reset. So we've seen number one, the market contracted, and now I'm not anticipating for price to do what, to give a second push before that bullish expansion to the upside, right? So number one, maybe number two, and then continuation, which is usually the case. Now, the next draw on buy side is, of course, this imbalance, and the next draw on sell side on Tuesday was, so the next draw on sell side was obviously this imbalance down here. So where I drew this blue box, there was a slight imbalance from right there to where price was just before the European Open. Now, going down to the 15 minutes time frame. All right, so I'm just going to just get rid of these boxes. So now this is an interesting one because, again, I was like, so actually there was two setups that presented themselves here, but I only traded one of them, right? So on this day, price obviously delivered on the continuation of my short, right? Because again, price traded to the high of the Asian range, so the Asian range, gave a railway track back into the range and gave what seemed to be a bearish break. But remember, this is a railway track that closes back into the range. There isn't a break yet. Is the next candidate closing outside of the range, and then the one after that in the London Open that gave us a definition of a bearish break. So now what we have is a break scenario. So a break scenario with an AOI being the bearish order block right there. So again, we can anticipate one of two different moves. We can anticipate a break, retest, continuation to the downside, or we can anticipate a break, retest, reversal on the 1 minute, which is where price creates a low, creates a lower low, and then proceeds to give a reversal. Or we can anticipate a break, retest, reversal 5 minutes, which is where price might inflect into the order block break structure on the 5 minutes, right? During that inflection, retest the 5 minutes high volume area, and then proceed to give a bullish continuation. And the third scenario we can anticipate is for price to give a reversal breaking structure on the 15 minutes time frame. This is a very time sensitive scenario, by the way, and then retesting a high volume area and then giving that bullish continuation. Now, of course, the 4 hour is still bullish, so we know that long is the better scenario, but we also know that the 1 hour is reversing. So a reversal is usually going to give us a low, and the price would take out the previous days. So take out this low before we see that reversal to the upside. Now, there are two telltale signs that price could give a BRR 1 minute scenario. What is that? Remember, I've said this quite a few times. So firstly, we have to wait for price to trade into our bearish order block. Now, the second thing is we need to wait for price to give a 1 minute confirmation. So when we get that 1 minute confirmation, you just need to, you can evaluate with your eyes, or you can evaluate with the actual tools that TradingView gives you. But as a rule of thumb, right, if price gives a break, retest of the order block, but the R to R to the next draw on liquidity, which is the recent low, is less than a 1 to 2, right? So what kind of a break of market structure is this? A classical break of market structure. So let's say, okay, I'm going short from last close candle and stop loss 5 pips above the high. Can I get a 1 to 2 to the recent low? And if the answer to that question is no, then it is highly likely the price would give a 1 minute BRR. The second confirmation is that usually price would leave an unmitigated area. So price would trade away from, after a break of market structure, rather than retesting the high volume area, price would trade away from that area, leaving an unmitigated zone, and then taking out that recent low. And that is another indication that we might be looking at a BRR 1 minute scenario. So BRR 1 minute scenario is very straightforward because you're simply waiting for price to take out the recent low, right? And then after taking out the recent low, you're then looking for a 1 minute break of market structure, right? So this is exactly what happened. So we had, obviously, price took out the recent low. This is obviously not a break of structure yet. And then price delivered on taking out this M15 imbalance, and is again another important indication is that price had obviously this M15 imbalance, which for me was a significant area of volume, because on a 15 minutes time frame yesterday, price gave a secondary break of market structure. All right, so price gave a secondary break of market structure right here, right, and left this area untouched, making this an unmitigated zone. Hence why it's no surprise the next day price came in, tapped that M15 imbalance, right? From that M15 imbalance for me was when the long opportunity, the perfect long opportunity, presented itself, because after price traded into the M15 imbalance, it proceeded to give a break of market structure, right? What kind of a break of market structure was this? Well, this was a secondary break of market structure. So AOI, so it's a classical break of market structure, right? So obviously our AOI is going to be the last downgrade candle, because we don't have a breaker in this case, right? So there's an area of interest. Stop goes 5 pips below the low, right there. And we're looking to go long, okay? So we're looking to go long from the last downgrade candle. Where is our primary target going to be? What's the first, what's the next obvious draw on buy side liquidity going to be? Well, that first draw on liquidity is going to be either, so you can aim for two things. You can aim for the bullish order block, right? That's a 1 to 3. It's not bad. Just coincides with where the 800 EMA is. Or you could aim for the recent high, the Asian range. Now, for me personally, the next draw on liquidity is the short-term high in the 15 minutes time frame, which coincided with where the bullish order block is. And for me, that made sense as the first target. Now, the second target could have been more ambitious. You could have decided to aim for, because obviously we're still in a bullish cycle on the 4-hour time frame. So you could have also, for your second target, you could have aimed for the 4-hour buy side target, which is the golden line. Or you could have aimed for the 1-hour buy side target, which is this imbalance. Now, personally, the 4-hour buy side target makes sense as a secondary target. And I set a price alert there at the time to trigger me and let me know when price trades into this area, so that I know essentially I can reevaluate the situation and see if I should stay in the trade or I should get out of the position. So let's take a look and see what happened. So essentially price traded into entry. It came a little bit low, but it didn't stop me out. So it was a very nice entry. Obviously hung around there for a bit before eventually giving us that rally. And then afterwards, so I'm just going to go to the 5 minutes time frame just so this is a little bit faster. So afterwards, price obviously traded into this order block. So very nice fast acceleration into the order block, into that H1BST. Now, this is very important, right? Because price gave this move that would have, it's a fake out, but it would have caused a lot of traders to panic. Well, you have to always interpret what's going on, because remember, the market is fractal. So what goes on one time frame would also go on another time frame. So obviously what happened was price also gave a 15-minute secondary break of market structure with this imbalance. So price obviously was trading second high and then taking out the short-term high, as well as filling this imbalance to satisfy the criteria of a secondary break of market structure. And then thereafter are given that nice bullish continuation and taking out the H4 high. It was a beautiful trade, absolutely beautiful trade. So there's a 1 to 7 on the second trade and a 1 to 3 on the first trade. So again, this is one of those positions that you really shouldn't invest on, okay? But this was on Wednesday. So Wednesday, we saw a very, very nice bullish scenario. It was a break retest 1 minute scenario in line with a 4-hour bias. All right, so now let's go into Thursday trading session. So again, going into Thursday, the next draw on buy side is the swing high. Next draw on sell side on Thursday is the swing low down here. Now, if we go down to the 4-hour time frame, we can see very clearly. Again, just to forward play this twice. Price has delivered on that second expansion on the 4-hour. So obviously before at the start of the week, we only had a single expansion. Now we have a secondary expansion. So we're fairly confident that price is likely going to give us that bear bullish continuation, because if price is taking out a short-term low and traded back to this high. So long was still the better direction. Next row on sell side is the same balance. Next row on buy side is the swing high. Now going up to the 1 hour time frame, we can see the price again. We've seen 3 pushes, 2 bearish reversal, 2 push reversal into a high volume area, and then we've seen again 3 pushes to the upside. And now what we're anticipating on the 1 hour is some sort of bearish reversal. Why are we anticipating some sort of a bearish reversal? Because price is giving us the 3 pushes. But again, just like we anticipated a partial reversal, I'm anticipating another partial reversal before a bullish continuation in line with the 4 hour time frame. So we're going down to the 15 minutes time frame, right? Actually, I'm just going to demonstrate the BST and SST on the 1 hour first. 1 second. So if I play this once, we can see the next row on buy side is the swing high. The next row on the sell side is the swing low down here. So if we go down to the 15 minutes, we can see the price is obviously accumulated for the whole of the Asian session, right? And we can see that price has delivered a, so just to clarify, so we've seen prices delivered a closer outside of the Asian range, not yet a break. We need to wait for the second candle to make sure it closes firmly, because this price could very well trap back into the range, making this again a trap, right? So we've seen that price is delivered on a secondary, price is delivered on a bearish break outside of the Asian range. Our AOI in this case was obviously going to be this bearish order block, right? So this is our area of interest. A bearish order block responsible for the bearish break outside of the range. Price has taken out H1 SST as well. Now, of course, what I was waiting for is for price to actually trade into that order block first, okay? But now, because I was still bullish on the higher time frame, I was like, okay, I was anticipating 1 of 2 things. Either price after trade into the order block would give a break retest reversal 5 minutes, where price trades into the order block and breaks structure in a 5 minutes time frame, or would give a break retest continuation, retest continuation to the downside, or a 15 minutes break retest reversal. So we can see very clearly that because price snapped back into the order block, but also broke structure on the 5 minutes, I'm anticipating a break retest reversal on the 5 minutes. So my new AOI went to this bullish order block. So at this point, what I was anticipating is for price to trade into this bullish order block, and then from here, I'll be looking for a 1 minute confirmation to go long, or I'll actually place a pen in order, because the risk to reward from this last down close candle was pretty good, right? So what I did was I evaluated. I was like, okay, if I want to go long from the last down close candle, stop going 5 pips below the low, and my first target was, of course, the Asian high. I could have gotten a 1, 2, 3, and that was pretty nice. So anyways, what happened was price gave a break of market structure and failed to trade into my area of interest. Rather, what we saw was a continuous bullish expansion to the upside, right, which essentially lasted into the New York session. So for me personally, there was absolutely no trade opportunity on pound dollar, but because we had ISM manufacturing later in the day, I had a similar thought process that I did on Tuesday. But now I was like, okay, price is rallying, right? So therefore, what is the projection for ISM manufacturing again, which is an indication of is a data release about manufacturing rate within the United States. And again, this was indicating that price should be looking to come down in line with ISM manufacturing, or it could be rallying constantly. So I anticipated that perhaps price would trade and give us a reversal during this red news event, and I'll just be looking to trade a retest of these high volume areas if I could get a 1 to 2 to them. But then I was only going to be looking for a 5 minutes confirmation shot again, because that was the much more confident and solid confirmation to have actually sold before that red news event takes place, right? So it's very important that you understand that. So essentially what happened was price delivered on this sort of secondary break of market structure. So what I did was I evaluated the situation. I thought, okay, this is at 8, it's like 2 hours, it's like still quite some time up until that red news event. So I had a little bit of doubt as to whether this was going to be that break of market structure. But what I did was I evaluated the situation and I said, okay, if I was to go short, from, let's say this goes in the secondary breaker structure, there's a short from the imbalance, and stop goes 5 pips above the high. And I put my first target. So for me, the most obvious target was a retest of the H4 BST, right? I could only have gotten a 1 to 1.717. So I was evaluating, okay, this is 2 pushes to the downside. This is a short-term high there. So for me personally, I think I'm going to see if price retest that short-term high, and I'm going to aim for my first target being the same thing, the H4 SST, because the retest of the H4 BST, because that was the next obvious draw on liquidity. And then after that, I said, okay, my second target would be if price was to trade below this point, then I would want to see price potentially retest the H1 BST. So TP1, TP2. So after the imbalance, so what happened was price actually traded into this imbalance, but it didn't take me in, right? Before retesting this general area. So when this move happened, I actually did have some doubts. I was like, okay, price has actually given a break of market structure, retest of the imbalance, right? Leaving this area unmitigated and retested this H4 BST. So I actually had some doubts, and I decided to wait until a little bit closer to Redney's event to see if price would deliver on a reconfirmation before the event takes place. So what happened? Price traded into the high, which is nice. I was like, okay, this is nice. But now I want to see another confirmation. I want to see price give me a reconfirmation before this event takes place if I'm going to get into this trade. So I saw price starting to come down. I was like, okay, this is nice. So I was now like, okay, price is giving a snap. We traded above this high, snap back into the range, and I can see a swing point has been created right here. So again, what I want to see is for price to give me that secondary break to the downside, and then I'll confidently enter a short position. So what price did, price delivered a higher high, and again, just before the Redney's event. And again, I advise this highly: do not enter the market just before, like when I say just before, I mean like 5 minutes or 10 minutes before Redney's event. Do not do it. That's just silly. You should already be in a position about an hour before the Redney's event takes place, right? Maximum 30 minutes, but do not enter the market just before Redney's event takes place. Because after the event takes place, the move is done. There's really nothing else to do, right? So again, it's quite late in the day. There wasn't really, so like, for example, if you remember on Tuesday, right, I was already in the market. So price had already given a break of market structure around 840. I was already in the market. Price retested the area before trading towards my first profit target. But that first TP got hit after the Redney's event took place. In this case, the first potential AOI got hit before the Redney's event took place, hence why I have my doubts. So I was like, right, price has already retested this area, then it's likely going to probably keep rallying, because that's usually what takes place after retest, right? Retest, rally. So that was on Thursday. So Thursday, I stayed up, but it was in vain because price didn't really present anything solid for me to trade that day. But this was good, because if we have price rallying and we have all these unmitigated zones taking place, then for me, this was a very strong indication that NFP Friday was going to yield a bearish reversal. So not having a day where there's a setup is sometimes a good thing, because that means that the next day is going to present something amazing to trade. And it's important to preserve your capital for that. So going into Friday, now Friday for me was the big payday. That's an amazing, amazing day. Next draw on buy side was the swing high right here. And the next draw on sell side is the swing low down here. Okay, and I'm actually still in this trade. So if we go down to the 4-hour time frame, right, so this is nice. We can see the price. We can see the price is delivered on 3 expansions, bullish expansions to the upside. This is very nice. The next draw on sell side liquidity was the swing low, and the next draw on buy side liquidity is the swing high right there. We go down to the 1-hour time frame again, just to forward play this once and just get rid of these lines. We can see that next draw on buy side is the swing high, next draw on sell side is the swing low, and again, this is the European Open at 2 and the London Open at 3. Okay, so yeah, pretty straightforward levels. We've seen a complete bullish cycle on the 4-hour, right? And on the 1-hour time frame, we can see again a pretty complete bullish cycle, right? So now it's a question of just waiting patiently for that opportunity to present itself. So for the duration of the London session, price stayed in the Asian range. So price didn't actually leave the Asian range. But again, like I said, I have a flexibility to extend my trading hours to New York as long as there is a readiness event that I can see price moving in line with. So essentially what happened, price gave a bearish break. So this was so nice. Oh, that's so good. And I know I just said something that is just a few minutes ago that I might contradict. So what, just bear with me, okay? So on the bearish break outside of the range, so we can see the price had given this initial bearishness and then didn't roll with drop back into the range. So it's pretty nice. Also taking out H1 SST, right? So the opportunity for me on this particular setup presented itself after, so there's an NFP took place. I wasn't in the market at this time. So for me, again, it's important to, if you're not in the market before the news, this is pretty early in the New York session as well, which is good. It's not like 10 a.m. New York time, it's like 8:30 a.m. I was just like, okay, I'm going to wait. But NFP delivered nicely in terms of there was obviously that bearishness, which I was anticipating. But for me, I was like, maybe this is only the beginning of what's to come. Okay. Because H1 is indicating that bearish reversal is absolutely imminent. So I just waited for the market to settle, and then it did. And then eventually price came back up here, and I was watching like a whole. So on the 1 minute time frame, so when I saw the market obviously did everything it needed to do, right? Traded back into the range. I was now interested in taking a short on the 1 minute time frame. So all I was looking for at this point was a confirmation to sell, and I was looking for a break of market structure, right? And price delivered on that. So price delivered on as you can see, on a classical break of market structure. We obviously have our imbalance, right? We have price breaking market structure right here. You can already see my slider just trying to calculate that 5 pip stop above the high is already still in place, right? So for me in this case, my entry was pretty standard, right? So short position right there, stop loss 5 pips above the high, right? My first target is going to be the recent low, which is the low that was created as a result of NFP, and I could get a 122 there, which is pretty nice. And then my second target, now because it's a big reversal day for me, I was like, well, if this is going to run, I'm going to look for an 800 EMA to run for a price to run to, but I'm going to set a profit target in line with it. So for me, the time frame that's usually good for this is a 15 minutes time frame, 800 EMA, which coincides with a beautiful unmitigated zone. So we have this imbalance after the break of market structure in 15 minutes. If you remember, again, on Tuesday, what did price do? After leaving this area unmitigated, it came down, retested it, bounced. So again, it's that repetitive nature of how liquidity runs in the market that I have a lot of trust in, I have a lot of faith in, because I've seen it happen over and over and over again. So the second profit target was the 800 EMA, but I aligned it up with where this imbalance was. So that's a 1 to 6 is a very nice run to the downside. So essentially what we can see, so if I just go back down to the 5 minutes time frame, all right. And I know I just said a few minutes ago, don't enter the market after the red news is taking place, but this is a very special circumstance. And this is the thing, this is why it's so difficult sometimes to explain the way that I trade. Like I can be like, oh, yes, the strategy that I trade with. But if you and I trade the same strategy, we're definitely not going to get the same results, because I also input a lot of my experience, my knowledge and understanding of price action. Remember, I devised this strategy. This wasn't something that was just given to me and I'm just copying and pasting. So I have a lot of deep fundamental knowledge of why I trade the way that I trade. But then I call it a strategy because I'm formulating it in a formalized way that allows me to share it with other people, so that you yourself can apply the same method and get a similar result or even the same result. But it's never going to be the same because our experiences are different, and we don't have the same fundamental understanding of this technique in the way that I do. But I do try my best to impart, like to share as much of my knowledge and understanding as much as possible. And the best way to understand my strategy is to watch these videos and to understand the way that I'm executing these positions and why I'm executing these positions. And I do hope that I'm doing my best to explain as much as possible my thought process and why I decided to, for example, take this trade, because it was just in line with the BRC continuation that reversed without imminence as a result of the 1 hour and the 4 hour cycle. And again, understanding the cycles is absolutely fundamental and key to understanding how to trade like this. So essentially, price delivered on that first profit target, and I actually went to bed at the time. It was quite late in the day for me in Asia. But then this was for me was an overnight trade, and I'm actually still holding this position, but I'm fairly confident that market open tomorrow, price will trade into my second target. So this is the NFP setup, and I highly advise that you should watch this video, study this video, but also go back, see these setups for yourself, and try to understand them for yourself within a framework of what I've given you and what I've taught you. And again, if there's anything I've said in this video that is confusing you, please, I urge you, ask me questions, put it in a group chat, in the general channel, and be like, hey, Walter, I just watched the video, and around this time you mentioned XYZ. Could you please clarify this for me because I don't get it, okay? This is how you're going to grow, and this is how you're going to become a lot more knowledgeable with this technique if you're actually trying to understand things as opposed to passively just taking in the information and trying to apply it as best as you can without trying to understand it. You would never get the results if you try to do that. So I urge you guys to please put in the effort to try and understand this information and the concept I've given you. And I look forward to your questions in the general channel. So wishing you a fantastic Sunday ahead. Looking forward to the week that we have coming. And I look forward to seeing you guys in the morning. All the best.